a great pleasure now to bring on board none other than Chris Wood of Jefferies. Chris is a long-term India bull. His views are widely tracked and followed by institutional investors, HNI investors, and by DI investors. And many say that what Chris writes is actually what happens in financial markets in the future. He's been talking about how and why he likes India. And he had explicitly written a note about a year ago where he talked about how how financial markets could react if there is a political uncertainty. So Chris, welcome to ET Now. Thank you for joining us.
Thank you for the introduction, Nakuj.
Chris, let me start with a simple question. Your reaction to the poll verdict yesterday?
No, actually, my reaction is genuine surprise that there wasn't that the BJP didn't get the I believe the required seats to run the government on its own.
Chris, the fact that it appears that the NDA government is set to come for the third term, they may be coming back with a weaker majority. Could that have long-term implications, short-term implications, or medium-term implications for markets?
Implication was clearly on the market sell-off yesterday. I'm actually surprised that the market has rallied today. I just checked the numbers. My Indian portfolio was down, I believe, about 11% yesterday, whereas the overall, I believe the Nifty was down 6%. So that doesn't surprise me unduly. Actually, I'm surprised. I'm surprised given all the obvious uncertainties. I'm surprised the market is up today.
So why do you think markets are up today? Is this an indication that markets are saying that what's happened on the political front is something which is factored in and it is time to move on?
And I think it's a bit premature to assume that because you've still got the horse trading. I mean, clearly the base case is that the current government remains in power with coalition partners, and that's not a disaster. But the reality is the great virtue of the last 10 years has been clear government, consistent policies, and not having to worry about horse trading between parties, which is always a feature of coalition governments. So personally, I'm surprised that the market is up today. But the good news from the fund flow standpoint on the Indian market is there's been huge retail flows into this market in recent months, quite dramatic actually in terms of the numbers, which is why I'm surprised there's not more of a correction right now. But the positive point is that the foreign investors are barely overweight India going into the election, because the market had done so well that driven by retail flows, the valuations were very high in the mid-cap space. So in my view, any significant correction in India from here will be met by foreign buying who will see it as an opportunity. But I'm surprised the market's up today.
Chris, if one looks at your model portfolio, it's a combination of private banks, real estate, few insurance names, and food tech companies like Zomato. Could you be looking at changing your portfolio orientation?
Not dramatically, no. But clearly, the area of my portfolio is my green and fair portfolio has outperformed dramatically in recent months. Clearly, because it's been in the hot areas. Hot areas in this market of late, recent months, quarters have been property, capex plays, and energy. So these areas are vulnerable to a sell-off, where the laggard in my portfolio has been the private sector banks, which would relatively outperform in a corrected market simply because they're low beta. But fundamentally, I believe the property capex cycles will remain intact, but I would expect some near-term caution on these themes in the market.
When you say that you expect foreigners to come back into India on every decline, what gives you this conviction?
No, because the foreigners were basically foreign investors. We believe in recent months we believe the average global emerging market fund is barely overweight India. And the reason they're barely overweight India is simply that India's neutral weighting has gone up because it was outperforming. And also foreigners have been adding back to China because China was so cheap at the start of this year. China was trading at 7-8 times earnings. So foreigners have been allocating out of India into China. And they basically were scared to come back into India because of the very high valuations, particularly in the mid-cap space. The Indian stock market has been driven in the recent months by dramatic retail flows. So actually my biggest concern for the Indian market going into this election was not the election result, because I wrongly believed the BJP would get the required seats to form the absolute government. My concern was that there may be action to introduce higher capital gains taxes in the next budget because of the huge evidence of growing evidence of retail speculation. Also, you've had the phenomenon in recent months of dramatic trading volumes in the options market. So to me, that was the biggest risk, not the election.
Chris, I'd like to draw your attention to the capex themes which you spoke about, and especially because L&T is part of your model portfolio. L&T is a big beneficiary of government capex, defense spending, and what's happening in the railway sector. Is there reason to believe that things could change for capex-dominated companies like L&T?
In the near term, I think there's reason to expect some caution, but fundamentally, I believe this capex cycle will remain intact, as indeed was the case back in, I believe it was 2004-5, when we had the shock election result, which was a bigger shock than what we got today, when the BJP were removed from office. That caused clear near-term extreme volatility in the stock market, more than we've currently seen in the last 2 days. But ultimately, the capex property cycle prevailed.
You also have PSUs as part of your India portfolio, not your global portfolio. Names like REC, Coal India, they are part of your India portfolio. How would you position now the PSU end of your portfolio, which is largely a play on power and energy?
Well, again, I would expect near-term caution on those themes, because if the BJP had won this election outright, I think there would have been increased focus on the potential for more reform of SOEs, boosting return of SOEs, investment returns. So again, that theme will have more near-term caution.
Chris, why are you bullish on real estate? And would you remain bullish on real estate, given that you were one amongst the first 15 years ago who called that the Indian real estate cycle was looking to go up, and you got it right. Last couple of years, again, you've been quite bullish on real estate. Would you maintain that view?
Well, now I'm extremely bullish on real estate. I've had 19% of my portfolio in real estate stocks. We've had the key reason I've been very positive on this sector is we had such an extended downturn. I believe it was 7 years. So we're now third year into a recovery. A lot of the recovery has been the high end of the market. So the key issue for this real estate market right now is will the recovery broaden out? And the other issue is, will there be policy measures to promote the more affordable end of the housing market? That seems to me a possibility.
Chris, in the light of where China is and that good old comparison of India and China, do you think after the recent bout of correction and given after yesterday's corrective bout, India could start looking attractive again?
No, I think India has a potential. The more the India corrects, frankly, the more likely foreigners are to start buying India. So if India had been down by a similar magnitude today as it was yesterday, I think you'd start to see foreign interest. It's also worth noting to your viewers that China's now already had a rally. China rallied by about more than 30% from its low in recent months. So the China bounce has already happened, but structurally, China still remains in a deflationary situation. Structurally, the Indian story remains far superior to China's.
Chris, you don't have any defensives in your portfolio, which is no IT, no pharma, no consumption, nothing when it comes to consumer staples or consumer durables. There is a view in the market that the current regime of the NDA3 could be strikingly different from the previous regime, which was more dominated, which was the previous regime was more focused on, let's say, capital expenditure and government spending. The current regime could really be focusing on reviving the rural demand and also stroking the consumption demand. So do you think there is merit in tilting the portfolio back towards consumer stocks, durables, staples, or consumer beneficiaries?
Probably on a 3-month view, there probably is, Nikunj, but I think on a 5-year view, there isn't.
So your
Yeah, because my basic fundamental view is the investment cycle will continue. Therefore, the investment cycle is worth focusing on more than the consumption cycle. But I would admit on a short-term basis that there is a case for making that tactical move you highlighted, but I'm not sure I'm going to do it in my own portfolio.
Chris, you've tracked Indian markets for almost, what, 3 decades now? And you've seen periods of coalition government. And if one really looks at the history of coalition government, Indian financial markets have also done rather well during those periods of coalition as long as there was continuity and policy reforms were in place. So do you think from a market standpoint, a coalition government can also work well and markets should not be worried about it?
No, coalition government can work okay, but it's a fundamental reality that it's a negative that you haven't got single clear party government. That's a reality which one shouldn't pretend otherwise.
But the fact that markets have stopped falling, do you think somewhere markets are already discounting a coalition government?
No, I think that's too sanguine. The markets are hoping for that. We have to remember there's a lot of retail money come into this market, so there's definitely the potential for further corrections from here.
And if Indian markets fall another 5 to 10%, would you be looking at increasing your weightage in Indian stocks in your model portfolio?
Maybe, but I'm actually more weighted in India than your average foreign investor. What I would clearly say that any further 10% decline in India from here, and you will see foreign interest picking up. The foreigners will view this as an opportunity because the foreigners are underweight India relative to where they want to be. That's not because they're smart and they predicted the election result. It's because basically they couldn't get back in the market because the market's been driven by retail flows. And basically the valuations in the mid-cap space have put them off. And I think, but the other issue for the market, aside from the obvious issue, obviously the key thing right now is a BJP-led coalition is formed in a way which looks rational. And then the next issue is, will there be any measures in the budget relating to capital gains, etc.?
If there is a change in capital gains or in the tax in the options market, especially in the F&O market, could that disturb the market or markets are already discounting that?
No, I don't think. I think action on the option market should be expected. Any fundamental change in capital gains, higher capital gains taxes will be viewed as negative. That's not good for foreigners. The other possibility is the capital gains tax is not raised, but maybe the long-term capital gains period is extended. I'm just saying these are possibilities. These would have been possibilities even if the BJP had won outright.
Markets to breathe a sigh of relief and for Christopher Woods to get convinced that Modi or NDA 3 is no different from NDA 2, what are the signposts you would look at? What could be that indicators which you would like to hear or observe which will give you conviction that all is well when it comes to the reform agenda?
I think the key thing then, Akunj, is clearly this government has been remarkable in terms of its own public spending by focusing on investment capex, not transfer payments. where we've had huge increase in government-related infrastructure spending. So if you had a sudden dramatic move away from that, that would be one signal. But many of the structural reforms put in place in the last 10 years will continue, one hopes. So one obvious structural reform we are now seeing the benefits of is the Real Estate Regulation Act, which has put the whole residential property market on a sounder footing. Another fundamental reform, in fact, probably from an economic policy standpoint, the key fundamental reform of the last 10 years has been the Bankruptcy Act, which everything I'm hearing has given banks, including most importantly public sector banks, important negotiating power with what used to be called willful defaulters. So these are fundamental changes which, in my view, are now in the statute books and would be very now hard to unravel.
Chris, if the starting point is 5th of June 2024, and if we are talking about next 3 to 4 years or 3 to 5 years, do you think Indian markets from the current juncture have potential to give double-digit CAGR returns?
And definitely. But I definitely think that level can go from levels lower to today. I'd be surprised if today marks the end of the political volatility.
That some more political volatility still lies ahead of us.
One would expect so, because the horse trading on coalitions always lead to that.
But in your mind, if there is volatility, the downside of more than 10% will certainly be a good entry point where you see global money or FIs, they could come back.
No, absolutely. Providing the current some form of BJP-led coalition, corrections of this market from the peak of 10% and more, in my view, will definitely trigger foreign buying. The foreigners are not overweight India in any significant dimension. On the global emerging market funds, many of them are probably neutral because the neutral weighting of India has gone up. And global investors, not dedicated emerging market investors, have barely invested in India as yet.
Chris, why are private banks underperforming? Is it pure technical aspect at play, which is that foreigners own private banks and they're selling around private banks? Is that the reason why Indian private banks are underperforming?
It's partly that. Actually, an interesting feature of the last several months, Nikunj, is that the two sectors most heavily services have been underperforming. Foreigners do not have the weightings haven't got the bets on the hot sectors that I've had. Most foreigners don't really have big positions in real estate, energy, capex plays. So to that extent that they will be looking to buy those areas on a correction. On the private sector banks themselves, I think there is a sense out there that these private sector banks which have done so well in the last 20 years, have seen their best days. Not that they are disastrous investments, but you may not get the stellar performance you had in the past. I believe CASA ratios in the private sector banks are now in the 30-40% range. You've got the extent that public sector banks are now more fundamentally in a better fundamental position because of the Bankruptcy Act. They represent more competition. So I don't think it's the case of the private sector banks being disasters. It's just that they may never have seen they may not be the stellar outperformers they were in the past. But right now, in the context of the derating of their valuations and in the context of them not being high beta, they are actually quite defensive.
It may sound slightly repetitive, this one, but please bear with me because it's an important interview and we're talking to you at a time when the whole world really wants to hear your view. So I'll start all over again. I guess what our viewers and what investors want to know are three simple answers. Answer number one, it appears that NDA 3 is on course to make the government. But with it appears and it is evident that NDA is coming back for the third term. Now, if that happens, there are three aspects which we need to consider and reconsider. Point number one, do you think at a macro level, which is on the aspect of tax collections, fiscal deficit, the way government has been spending in terms of capital expenditure. Do you see the macro changing?
There's clearly a risk of a more populist element entering this next government. So that's what we have to watch out for. But that's actually more of a risk from a bond market perspective and currency perspective than a stock market perspective.
Second question, perception, which is always defined as PE multiple. India has been enjoying a PE multiple or a premium PE multiple for a variety of reasons. Stability of the government, solid growth, strong capex cycle, and great corporate governance. Do you see the P multiple contracting, or the P multiple of India will always be at a commanding premium?
No, I believe the P multiple remain at a commanding premium, but the P multiple for the big caps is much less elevated than for the mid caps. The mid caps, there's definitely the likelihood there's a significant risk of a derating. But I think part of that risk relates not just to the election, but to any moves on capital gains front.
Third, Chris, is which are the areas where you think reform or government policy would be accelerated, and which are the areas where the government policy making could slow down or could take a back seat?
Well, I think an area where you may see one area you may see more action is to encourage affordable housing. But I would think where the risk is that the budget has very much been focused on capex and less on transfer payments. So that has to be a risk, because that has been a marked feature of this government.
Chris, every government has a unique, policy ideology. Modi one was marked with building digital infrastructure, fixing the power and the steel sector problems in India. Modi 2 was about boost to manufacturing, Atmanirbhar India, and making India very global in terms of the supply chain changes. What to your mind could be the hallmark of NDA 3 or Modi 3?
Well, I think that whole pursuit of building manufacturing capability, FDI, I think the focus will definitely remain on that, and that has been aided by the whole China Plus One strategy. But I think we were hoping for a big agenda on SOE public sector reform. So I think that's where there's now the question mark on this new government.
So, Chris, if I start summarizing our interaction, can I say that in the way you look at India, even though you are surprised with the so-called political mandate, but you are not inclined to change your India view? You are still of the view that India is the best country to invest in. You are not changing any stocks in your model portfolio, and if at all there is a comeback in defensives like FMCG and some of the so-called consumption stocks, that rally would be short-lived.
That's basically correct. But if I was running my portfolio on a 3-month view, Nikunj, I would be making some changes. But the key question here is, which we don't really know the answer to as of today, is can the current government has performed, in my view, remarkable. In my view, the government of the last 10 years has been the best government in the world in terms of making positive changes, affecting people's lives. So the question is that ability to govern fundamentally compromised by being in a coalition? That's the point. We don't know.
Just to wrap it up with a few more follow-up questions. Today we are discussing the Indian election cycle. 3 months out, we would be discussing the US election cycle, which perhaps could have greater ramifications for how risk in the world would move. What is your take? How do you see things would move on a global front for global equities in general and for risk on trade in the run-up to the US election? Because the goalpost will now move from India to United States.
Well, on the US election, I think it's true. To me, there's just going to be a massive amount of noise. By the way, there's clearly going to be a massive amount of media-generated noise on these correlation discussions in India. On the US side, to me, the key issue is that the election is resolved with a clear winner. That the market will just want to see a clear outcome, because clearly the concern will be, given the divisive nature of US politics, given that all the polls indicate this is still a close race, the biggest concern is there's not a clear winner and you get a disputed election. That would be so to me, any clear outcome would lead to market relief, regardless of the outcome.
So far this year, India has underperformed global markets. Do you see it's a matter of time the tide could turn and India could start outperforming global markets?
Well, in the short term, there's a risk it underperforms more, I think. But it's not a dramatic underperformance, right?
Dramatic underperformance, just here or there, and in dollar terms, actually, it's not very stark also.
No, it's not. But in the short term, I think there's a risk of a more severe underperformance in India.
Okay. Let me record this, something which I'm sure will do very well on a digital platform, and I will be repetitive with this one, but I'll take my chances. And my question to Chris Wood is...
Are we still live?
We are live, sir. We are live. We are live. We are live. We are on TV right now.
Yeah, because I've got a noisy window. I should shut the windows.
No. Last question. This goes live on digital as well.
Yeah.
We'll cut it. My question to you is more like a snappy one.
Yeah.
What is Chris Wood's short-term market outlook, medium-term market outlook, and long-term market outlook?
No, so short term, I'm surprised the market is not correcting more. I'm genuinely surprised the market is up today.
Medium-term outlook?
What do you define as medium term?
1 to 3 years.
And I remain positive. Yeah.
And 3-year plus or 5-year plus?
No, on that level, I believe India remains definitely the best market on a long-term 10-year basis. On a 3-year view, there has to be the market that could outperform India on a 3-year view is Japan, if Japan really is coming out of deflation, because that's a major game changer. On a 10-year view, I remain firmly of the view that India has got the best prospects.
Exactly 1.5 years ago, Chris Wood added Zomato in his model portfolio. Zomato was at 55, now it is at 175. How did Chris Wood identify it, and which could be the next Zomato in his portfolio?
Well, I'm going to dodge that question because I'm hoping to be in India late next month, so I need to check things out. So I'm reluctant to make huge changes in my portfolio until I've been back in India.
Forward to meet you, perhaps hosting you for a cup of tea, and perhaps just having a long chat. Really appreciate your time. I know it's been a busy morning for you, yet you've really kept in half an hour window for us on a busy Wednesday morning. Really appreciate that.
Thank you, Nikhil. Good to talk.
Well, that's Chris Wood, surprised with the market fall, but he's of the view that if markets fall 10%, it's going to be line of FI investors who've been right now not investing in India. They could be making a comeback because FIs like India, they don't love valuations. 10% down, well, it'll translate into a market which you love and a market which will be attractively priced.
If you like this video, then like, share and subscribe to ET Now.